Hello everyone. We thank you for your continued support for our business and strategy. My name is Shinichiro Shiraki, CEO of Aizawa Asset Management. Every month, we provide our video letter talking about our brief comment and outlook on the Japanese equity market. Today, I'd like to give you our comments about our market in July 2022 and our focus on current months. As inflation accelerated globally, signs of an economic slowdown in the US and Europe started to be seen everywhere. This boosted speculation that US long-term interest rates would peak, lowering selling pressure on shares globally. At the same time, long and short-term interest rate reversed after the Federal Reserve Board of the US made no change in its stance on curbing strong inflation. A number of investors then started to assume the US economy would enter a recession. There also seems to be collection among semiconductor-related companies fueling the sense of an economic slowdown. On top of all that, the European Central Bank raised interest rates by 50 basis points, adding another piece of negative news about the economy to the mix. US long-term interest rates fell to around 2.7%. In the currency market, the dollar paused to appreciate against the yen, and investors bought back the yen to around the 133 yen level. In the commodity market, oil and copper softened. Meanwhile, the global stock market remained firm, as the expected inflation rate fell in the US. Japanese shares seesawed due to the landslide victory by the ruling party in the upper house election and the resurgence of the novel coronavirus in Japan. Still, the market remained solid, following firm performance in the US and European stock markets. As a result, the TOPIX index and TSC Mothers index jumped 3.71% and 8.61% respectively. In the US, growth stocks mainly in the technology sector were firm, as investors already factored in a late increase of 0.75% at the Federal Open Market Committee meeting at the end of July. With the global economic slowdown being factored in, investors' interest in the market is expected to shift to earnings announcements for individual companies. If inflation in the US shows signs of calming, the market may start to seek a timing for the Fed to end monetary tightening. Still, the timing may be too early, as the last time US stock rallied during period of the Fed's continuous rate hikes was in 1980. The market will probably trade in the box range, as there will likely be a tug of war between concerns about worsening earnings from an economic slowdown and positions taken by investors to prepare for a drop in shares. Consequently, our basic policy is to maintain a neutral position, and we will aim for profitable opportunities with short-term trading. As always, thank you for listening to our monthly Aizawa Management Market Update. We hope our video was helpful, and we look forward to updating you again next time.